Good afternoon. Thank you for joining us. It's Tuesday, June 30th, 2015. This is our latest edition of Ask the Experts, and I'm Chris Grams. I'm with CME Group, and I'm really excited to be joined by two grain and agricultural experts today. We're going to share their insights on the acreage and grain stocks reports this morning. Immediately to my left, Dan Basse, who's president of AgResource Company, domestic and international agricultural advisory firm, which he founded in 1987. He's also an esteemed economist and has been in the commodity business since 1979. Thanks for coming back, Dan.
Thanks, Chris.
To Dan's left is Steve Freed, who is Vice President of Research for ADM Investor Services, overseeing analysis of all market information and trading strategies for over 1,250 brokers. Steve leads a staff of analysts and consultants. He creates daily short and long-term market outlooks, monthly grain PowerPoint presentation updates, electronic statistical manual identifying changes in world supply and demand conditions, and daily market video, and most importantly, lending his expertise to us today. Steve, thank you for joining us for the first time.
Thank you for inviting me.
Quick note to our online viewers, we do have a way for you to ask questions of our experts, so please go to that question box, submit your questions via email. We'll make sure that Steve and Dan get to your questions. Thanks so much. Well, I guess we'll cut to the chase. We had a very interesting set of reports today. Dan, why don't you kick us off with some of your top takeaways?
Well, thank you, Chris. You know, as you looked at the reports today at face value, there was a few surprises, but nothing that really just jumps out. Soybean residual is something that we were afraid of coming to this report. It was bigger than we thought. We found 49 million bushels less than what the trade had expected. That kind of got the whole show going. But when you stand back and then look at the corn residual, or you start looking at wheat residuals, they kind of balanced out pretty well. And in terms of acreage, soybean acreage was record large at 85.1 million acres. That's down 100,000 acres from what traders were expecting. Corn acreage was at 88.8, down about 300,000 acres from what we were looking for. And so generality, the acreage numbers all combined, we were down 1.1 million acres from a year ago. It didn't really get you all that excited. Now, behind all of this stuff, I think you need to understand we've had two and a half weeks of flooding rains. And those flooding rains have occurred across Illinois, Indiana, and Ohio, and also catching a little bit of Kentucky. And those flooding rains really set the background for the discussion of lower yields. And so when we got these numbers today, even though they were supportive, or I would call them positive, it was the trigger to get the funds buying in the market. And so we had a very, very big session today. I think December corn traded 408,000 contracts of volume today. That's a record I think you'll find tomorrow. Funds came in here and just bought huge amounts and pushed corn up to sharp gains, up 26, 27 cents. Beans were up 50, 55 cents. And the wheat market just was a me too. They came along, even though the balance sheet and everything on wheat seemingly was a little bearish. So I think as we get into this, maybe Steve has a little differing opinion, but I wasn't all that surprised by the numbers. Maybe I was more surprised by the reaction of the market. But I guess in the backdrop of all the rain, the funds came at us, and that's where we ended the day.
Interesting. Steve, anything else you'd highlight about today's reports?
Well, I think Dan did a really good job of explaining the numbers. I think that now you get into the scenarios of the various analysts and traders about the what-ifs. And I think everybody spent today what-ifing. And, you saw different people talk about, okay, maybe their harvested acres in beans is now too high because of the weather. And now maybe I need to plug in a little bit lower yield than what the USDA is using in June. And all of a sudden, you start bringing the carryouts down. And so from a stocks to usage ratio, you start plugging in maybe a higher price scenario. And, the interesting thing is if nothing changes from here, you're probably looking at tonight's closes a little bit above where some of those stocks to usage ratio values would suggest we should end up trading. And so now the market's probably a little bit ahead of itself and probably plugging in a little bit lower yield than what maybe the crop rating suggests today. And maybe in the case of old crop beans, a little bit higher demand than what the USDA's got plugged in. And I think that if you want to stretch even a little bit further, 30 days ago we were bearish and we didn't need any more acres to be planted in 2016. This report is going to encourage people to plant more acres. South America soybeans, global feed grains, even here in the United States, the farmer's has given a reprieve on prices, and he'll probably think about at least buying the same amount of acres or even more next year. So now I think as of this moment, we're going to put these numbers behind us. And as of tonight's close, in theory, we've traded all the numbers. And now we have to look ahead and try to figure out what the weather's going to be like. This morning, the 2-week forecast for the Midwest looked like it was going to be good for the crops that are too wet and good for the crops that are really rated really good right now in the western Corn Belt. And then I think we have to see what after that what happens, because any given day you could walk in here on Monday morning and the market could give some of this back if the weather starts improving from what we've had. I mean, nobody forecasted this late fall, early spring that we were going to have record amount of rains in parts of the Midwest this year. So we're kind of flying blind as far as long-range weather forecasting is concerned, but I think we put these numbers behind us now and trade weather.
So a little bit of what-ifing from traders and folks today. Dan, not surprised by the support, but some surprising reaction to today's reports. How did futures markets react? For those of our viewers who maybe aren't following the prices as closely, how did futures react to today's report?
Well, initially they were higher. I mean, we got the numbers out of the way. The soybean market kind of led the advance, and then we just kind of spilled into ourselves and ran through technical resistance and spurred more and more buying as the day continued. So it was a big day, Chris. I mean, we were up, the June report is usually one of the most volatile of the year, and this didn't disappoint today. I mean, beans up 55 cents, corn up 25 to 29, wheat up 30 something. This was a big day.
And I think that if you look at the charts, we've retraced some big moves from last year's highs, and technically speaking, when you look at November beans, 1040 is a really important price for the psychology of the market, just like 440 D's corn is, and like $6 wheat. And so you really, I think, have to have some more ammunition to push above those price levels. And the first thing is weather. The second thing is the July 10th report. What does the USDA do with these numbers? You don't think they're going to change their yields until the August crop report. And globally, there's a lot of beans in South America. So, I mean, the July 10th numbers may not reflect what we traded today. So we have to kind of figure out down the road how we're going to make some changes from today's numbers and the reaction the market had today. And realistically, we've changed the way we trade. I mean, we used to have people on the trading floor, people out in the field look at these numbers and say, okay, this might be worth 20 cents in beans or 10 cents in corn and a nickel in wheat. And now you just have machines that really extend either up or down movements when they read a headline. So it'll be interesting to see if the weather does turn favorable, how we trade from here.
Speaking of some headlines, a couple of things that I pulled from the USDA's report. Lowest planted acreage for corn since 2010. Is that something we were expecting, or based on the...
I wouldn't say it was pretty much a trade had gotten it. I mean, we saw the margin tensions. We were a little bit above 89 million acres. This came in a little under 89. I don't think it was a big surprise either way.
No, and I think that in 2005, in corn market, everything changed when we introduced ethanol as a demand feature in corn, and we needed 90 million acres of corn. Some of the market feels now that some of the demand has matured, and so we don't need that 90 million acres anymore, especially with yields going up like they are. I mean, USDA thinks 10 years from now we'll have a national average corn in 185, and if the demand doesn't go up, we need less acres. So, the trend in corn is lower acres unless we have a weather problem.
USDA also noted soybean area for harvest will be a record if realized. One of the things we were talking about before we started filming was, area for harvest at 84.4 million acres will be a record in soybeans if realized. Yet there's still some talk about possible prevented planted acres. How does that all come together?
Well, as you saw, Chris, they're going to resurvey a few states: Arkansas, Missouri, Kansas. Not the big Midwest states, but at least them to see where planted acreage are. For instance, I took my harvested acreage down another 1,000,000 acres from where USDA had it today, planted and harvested acreage, and I plugged in a yield of 45.5. Okay, I've got exports down a little more, but I end up with end stocks of 460 million bushels. Now, you will find people in the trade, and this is where the disparity comes in, I think, Steve, where some people are talking end stocks as low as 150 or 200 million bushels. So it's highly unusual at this time of the year that I have a range in soybean end stocks that could be as low as maybe 200 and as high as 450. And so that's what the market has to sort out, and that's only going to, I think, add the volatility forthcoming. I am not as big on my exports because of China and because of what Latin America will have now in terms of shipments forthcoming, but we'll see if USDA adjusts. And I would be surprised, I don't know if you think, Steve, but I'd be surprised if USDA changes their yield estimates in corn or soybeans in the July report.
No, I don't think they will. I mean, I think they'll wait for the August surveys. You know, up until about a week ago, you kept hearing the same thing, rain makes grain, and so that's, I think, how the market first psychology was, and then secondly, how surprised it was of the impact these heavy rains have had. And you know, I think that in talking to farmers in the wet area, that they will not harvest the acres that they tried to plant. And so you just have to figure out from where did the USDA start their acreage estimate today. I mean, was a farmer going to plant 87 million acres, and now he's going to only plant 85? And is he going, well, eventually, you know, a year from now, will we find out, like we did today, that you know, last year's crop is overestimated by 70 million bushels? I mean, you know, it takes time sometimes to figure out what some of these acreage or what some of these yield adjustments are, and it really kind of disrupts some of the market's ability for price discovery. But you know, I think the harvested acres will be lower when it's all said and done. It just comes down now to what the yield's going to be.
Yield is job one here for the next 3 to 5 weeks. I mean, that's really, I think some people would be disappointed. We both agree that USDA won't change it in July. That'll be a disappointment. We did some correlative studies in which we tried to look at June weather and correlate with final yields. And surprisingly, we found there wasn't a great correlation. So there are going to be some acres that are lost, but there's still some good fields out there, along with some not so good fields, and it's that give and take that will determine where we fall.
So in terms of weather, we're really looking at July and August for, you know, really coming through on pollination and finishing up through harvest.
And the problem is that no one, whether it was 30 days ago or 6 months ago, forecasted record rains for this spring. So now we're flying kind of blind as to even what the 2-week forecast is, let alone what's after that. So we've had a few years in which the water is shut off, and we've had a lot of years, though, in which things turn normal. And so we're just going to take it day by day, and Mondays are going to be big days for the market when it comes in and sees ahead what the forecast is.
Okay. Steve, you said a couple weeks ago we were bearish. Today we have a somewhat bullish report. I was surprised by the increases in on-farm storage in corn, beans, and wheat. Perhaps the industry and yourselves were not. Do you think this will coax some of that, old crop out of on-farm storage?
Well, I think the market feels the farmer has sold a lot of old crop corn and soybeans in the last 2 weeks. You know, that there was guesstimates as high as farmers maybe have sold as much as 80% of their corn and 90% of their beans at this point. And we've had a big change in ownership from, the fund short to the commercial short. And so I think if a farmer's out there and he isn't up to those percentages, he should catch up to those percentages on these rallies. He hasn't really done anything for 2015 yet. I think he's waiting to see what kind of crop conditions he has. But, the guess is that he's about 20% sold. And so if he's not up to that, he should catch up to that. And maybe even, especially in the Northwest Corn Belt where the crop is rated so good, he probably should catch up and move ahead a little bit on this rally. You can count on one hand the number of rallies we've had because it's too wet, and so this was kind of a surprise, but it's helped the farmer because we were predicting, or the USDA was predicting before this year, that we were going to see a big drop in net farm income, maybe the biggest year-on-year drop since the Depression. And I think this is going to help the farmer if he takes advantage of it.
We talk a lot about the grain producer, the farmer. Any implications for livestock producers in today's report? What does this mean for feeding?
Well, I mean, the hog report came out showing more hogs, a bigger herd. So I would think that, on breaks, if we start seeing a break from these price levels, they'll probably get some more 16 supply on. Cattle market, boy, you've had the best pasture conditions maybe you've had in a long time. So I think they're still out on the pasture. And I think that from an exporter standpoint, we've been out of the market for corn and wheat for a long time, and we're now no longer competitive in the bean market. So, I think that the end user on that side is looking somewhere else right now for lower prices from an export standpoint. So, I mean, I think the end user will probably take breaks now to get coverage for 16.
So we have our next WASDE report out in July, and do you think there'll be any implication for feed demand?
They'll make some adjustments. I mean, on this report, they could adjust corn feeding up 25 or 50 million bushels after today. They'll cut the residual, or raise the residual on beans to adjust for lower stocks. We think old crop bean stocks are 275, give or take 10 million bushels. So they will make some adjustments to that, and then they'll take the plantings number as seen today and just kind of apply them going forward. Again, outside of the special survey states.
Yeah, and I think that you can go back since 2005 and see that on report day, the daily ranges is much wider than any other normal day. And so we would expect on July 10th, everybody will be excited about that and see, what the USDA is going to do. But I think that, the real big report will be in August when they start adjusting yields.
So we talked quite a bit about weather. Any other supply factors that you're keeping a close eye on over the next several weeks leading into the July and August reports?
I always think we watch world weather. There's been some, fairly extreme heat and dryness across France and portions of those areas. I'm not sure it'll have a big impact on wheat, but I think the European corn crop has to be watched. We got some Canadian data out this morning, and Canadians haven't done particularly well with rainfall either. So there's some pockets around the world that, probably will have smaller harvests, both in rape, canola, and to a lesser degree, wheat and corn.
And there's been some private estimates in the last 20 days that have lowered the world wheat carryout, looking at higher domestic demand, and then taking that forward to next year with maybe a couple of lower crop estimates. So it may be the biggest number might be what the USDA does, the world wheat supply and demand numbers. And if they don't make any adjustments, wheat's too high priced. And then we have to start trying to figure out just how do you trade record South American soybean stocks versus the fact that we're lowering our stocks? I mean, realistically, the South American meal is cheap enough to come into the United States now, and so does that happen? And does that offer some resistance to the marketplace? So we have a lot of extremes right now, and so we have to try to figure out from a price standpoint how to figure all that out.
Steve, I was just looking, if I use my wheat balance sheet from USDA today with feed residual and everything else, I end up with end stocks of 950 to a billion bushels.
Right.
I mean, the biggest wheat end stocks we've seen in a long time, yet we rallied big today.
Yep.
And in Latin America, I mean, we're now cheaper in Argentina and Brazil all the way through December by 30 to 40 cents than the U.S. Gulf. And so why would China buy beans here? It's really, I think Steve brings up a good point. It's going to be an interesting year in terms of the demand profile as we go forward.
Yeah, that was really my next question is, the demand side of the equation. What are we seeing from China? What are we seeing from elsewhere right now? So that's a good point.
We're not seeing much here in the U.S. Chinese purchases have been very slow, and I would imagine they keep buying from Latin America. And to our surprise, the Argentinian farmers have been very big sellers in the last couple of weeks, and I imagine was another big seller today. At least that's what my contacts are suggesting as I went home.
Well, gentlemen, I'm waiting to see if we have any other questions coming in from our online viewers. But in the meantime, is there anything that we've missed from today's reports, or as you're advising your hedgers, your producer customers, what's top of mind for them aside from obviously weather over the next several weeks?
Go ahead, Steve.
Oh, well, every day, gosh, I don't know how many years it's been, maybe 5 or 6 years. Every day we come in and we start looking at things like the dollar and money flow and what's going on in global stock markets and global economies. And it's always interesting to watch what's going on in Europe and what's that mean to demand down the road. And China seems to be slowing and trying to stimulate their economy. And so, I mean, if you set aside this wet U.S. weather and the dry pockets that Dan was talking about, actually globally it feels like demand is slowing, and that if we only traded that, if we only traded currencies, if we only traded economics, we probably would be a little bit lower than we are right now. So we come in every day and we look at the currencies and we look at the economic news and then we look at the weather. And so that's a little bit of a change over the last 6 or 7 years than what we used to do. We used to come in and just this time of year look at the weather, and now we're looking at other factors. But I think the main thing is that everybody has to be really quick in the next 2 weeks to decide what they want to do, because what happens to prices is going to happen very quick in the next 2 weeks.
And I think, Steve, your point about that is there's estimates on soybean yields at 42.5, for corn at 159, 158, which is where we see the market trading today. In other words, if I modeled out what prices are saying, it's about a 158, 159 corn yield or a 42.5 bean yield. If the weather is good and we start moving back and conditions stabilize and then start rising, this market will have a much different aspect. So the weather volatility, the market volatility will be rather acute, I think, for 3 or 4 weeks here as we try to decipher where in that yield panel we actually are.
Again, back to weather, something that we're all keeping a close eye on. Any concerns about transportation? There's been some river flooding and actually transporting of grain at this time. Is that something that producers or commercials are keeping an eye on at this point?
Since you work for one of them, I'll let you answer.
Well, we've had an interesting couple of weeks with the force majeure that was implemented, the high waters in St. Louis and Hannibal, and so this rain this week isn't really going to help that situation. I think in part, maybe the market's lucky that at least on the corn and wheat side there is not a lot of export demand, and we're finishing up the soybean marketing year. So it may not be as big a problem, but certainly the high waters have caused a lot of logistic strain to the marketplace, and so it might have changed some of the deliveries that we had on the July contract. And I don't think a buyer would necessarily change their ideas about buying U.S. Because other origins are cheaper right now. But just, whenever you get this much rain in this short a period of time, you're going to have logistic problems.
Believe it or not, I think you gentlemen have covered it all, because I have no questions from our online viewers today.
Oh, great.
Good.
So, Dan, any final thoughts before we sign off and remind people about watching the archive video of today's webcast?
Really not. I get back to, again, my soybean balance sheet has 460 million bushels, which, if I model it out, tells me that bean should fall back under 9. Though I don't know how high is high, but that assumes a yield of 45.5, so it really gets down the yield. Others are using a yield of 42 or 42.5. On corn, we're still using 165.5, and we have end stocks getting close to 1.9 billion bushels. I worry about demand going forward. I think that's a herring we all have to think about. But for the next 6 weeks, I think it's all about Mother Nature and volatility here in Chicago.
Steve, you get the last word.
Well, first of all, thanks for inviting me, and hope everybody watches the market pretty close over the next 2 weeks that have an interest in the markets, because it's going to be pretty exciting. As Dan pointed out, you have people out there tonight that have a very low carryouts and looking for higher prices. And then you have some people that maybe are a little bit more realistic view. And if the weather changes, this could be the top of the market, a very significant top of the market. So you got 2 to 3 weeks to decide. And like Dan says, it's pretty much primarily going to be up to the weather. And that's the hardest thing to guess. and the impact that it has on crops. And so exciting times. And a month ago we thought we were just going to put this market to bed and it was going to be done. And now we have something to talk about.
Good stuff.
Great. Thank you both. I want to thank our experts, Steve Freed of ADM Investor Services, and Dan Basse of AgResource Company. Just a reminder that an archived version of this video will be available on the CME Group YouTube channel. That's youtube.com/CME Group TV. Thank you very much.